If you haven't gotten your free money from Moomoo yet, I don't know what you're doing. Use that link down below. Deposit at least $100 and boom, you get up to 6 stocks. You heard that right, up to 6 stocks, each up to $3,500. Again, use that link down below. And with that being said, let's dive into the video. So we got a lot to break down today, guys. We got a lot to break down. We had Facebook report, PayPal, Ford, Qualcomm, and the list goes on. So a bunch of companies to report, or rather to break down that reported earnings. And of course, we got to break down the overall markets, kind of what's going on, and kind of where my head is at, what I'm looking to do. So without further ado, guys, cheers. And actually, this coffee is empty, and I'm not making another one today, but cheers anyway. We got some coffee here. We got some water. Let's get into the video. So the markets today ended up closing pretty much all over the place. We had the Russell close down 0.3%. The NASDAQ went down barely. I mean, it pretty much broke even. And we had the S&P up 0.3%. The Dow went up 0.2%. And we had the VIX close above 31 points. It went down 5.7% on the day. And when it comes to the metals, let's see here. We had gold go down 0.9%, silver down 0.9% as well. And just look at the volatility, guys. I mean, we talked about this in my previous video, but we're going to mention it again. This thing, in terms of SPY and Triple Q for that matter, we ended up ripping at market open. SPY went all the way to about 422, then it dumped down to about 415, rallied all the way back to 423. It actually took out that high from earlier in the day. That happened at about 1 p.m. on the East Coast, and then we ended up selling off again heading into the close. We went down to about 416, and now guess what? We are up to 420 after market hours, as we had a couple companies report, which we are going to break down. So make sure you all stick on throughout this video. So very volatile, and there goes Siri talking on my watch. Shut up, Siri. Very volatile day today, all over the place, and you guys can see Triple Q here, which is probably moving up even more aggressively in the after hours. Yes, it is, guys. There it is. This thing opened up at 317, ran a 323 in the beginning of the day, then it dumped all the way down to 315. That was at about 10:30 a.m. on the East Coast. Then we ran up to 322 again. That was in the middle of the day. Then we dumped heading into close to about 316, and now we're almost at 321 after market hours. So you guys get the point, right? Very, very volatile. And overall, in the grand scheme of things, I mentioned this in my previous video, but I'll say it again. We are still downtrending on Triple Q on the 20-day chart and on SPY, so keep that in mind. Just because we're moving up a little bit after hours, or we had a nice little green day for SPY and the Dow, just because we had that happen, we're not out of the woods yet. We're just not out of the woods yet. And until SPY breaks, let's say the mid 430s, which were about 15, 20 points under that, and until Triple Q breaks, let's say 330, 335, we're still going to be in a downtrend, guys, and we got to play it accordingly. So let me know your thoughts. I don't want to waste too much time on the markets today in terms of SPY and Triple Q, VIX, all that stuff, because I want to break down some stocks. We have Facebook, PayPal, Ford, Qualcomm, Pinterest, Teledoc, which is just a freaking disaster, guys, absolute disaster. And we got to break down Las Vegas Sands at the end of this video. So if you all are finding value, and if you enjoy the content, make sure to smash that like button and subscribe. We're almost at 25,000, guys. As of now, when I'm filming, let's see how many subs we got. We're at 24,939 subscribers. So yeah, we need about what is that? Is my math good enough, guys? 61 subscribers. So make sure to subscribe. Let's get to 25,000. And now let's talk about what the heck is going on with Facebook, which, guys, take a look at this. Facebook is up $33 in the aftermarket hours, which I'm freaking, I'm pumped about that. I'm very pumped about that because, look, it closed at 174. Just to give you guys some numbers here, we closed at 174, down 3.3% on the day, and now we just hit 209. We're at 207 right now. So this thing is up big time, guys, big time. We're talking almost 20%. We're talking about 18.5, 19% in the green right now. And sure, this could collapse back to 180, 185 tomorrow, and it could give back all of the gains that we're seeing right now. But overall, it's not doing that yet. In fact, it keeps climbing and climbing and climbing. Earlier when I checked Facebook, because I did actually look at all these earnings, guys. Usually I don't do that, but today I couldn't help myself. I had to right at 4 p.m. I was watching these stocks. Once the report came out, it ran up to 190, and I was like, maybe it's going to pull back from here. But no, it just kept on trucking along. And again, now we're over $207 a share. So they did Q1 EPS $2.72 versus $2.56 estimated. So that beat, but get this, guys, they missed on revenue. $27.91 billion revenue versus $28.21 billion estimated. And we all kind of knew, let's be honest, guys, based on the previous report 3 months ago, 2.5, 3 months ago, we kind of already knew that revenue was not going to be that good this year. We knew that. The cat was already out of the bag. We knew that even before that, right? So that's not too big of a surprise, in my opinion, that revenue came in a bit soft, and the guidance for the next quarter is a little bit under the estimate as well in terms of revenue for Q2. They're looking to do $28 to $30 billion versus $30.6 billion estimated. So guidance is down a bit on revenue, and again, they missed revenue for the previous quarter, but the markets kind of already knew that. They already expected that. And Q1 daily active users came in at 1.96 billion, which is up about 4% year over year. So we're obviously seeing a huge massive, whatever you want to call it, move here on the intraday chart. But let's pull back a little bit. Let's go to the 4-hour and kind of let's see where we're trading on this larger time frame. So, and by the way, guys, let me see here. Did we just hit a fresh low this today? I thought it was this morning. I guess not. Middle of the day is when it was. We did. We hit $169 a share in the middle of the day today, which was a fresh low on this 4-hour chart, and now we're up about how much off that low? We got to be up over 20% now, right? Oh my God, guys, we're up about 23% off of that low, considering, again, we're up a lot in the aftermarket hours. So Facebook right now is right at the 180 moving average on the 4-hour chart. We already broke out of the 50 SMA, but now we're testing the 180, which is right around 205 to 210. So if this breaks on Facebook, we might get a move towards 230 to 240. That's very possible, which was that high point from earlier this month in April before the entire market completely collapsed. If you guys remember, Facebook was at 240 roughly, and it got all the way down to 169 in the same month, which is just unreal. Facebook stock went down about 27% from 240 to 169. Crazy stuff, guys. And Google went down a lot. We talked about Google in my previous video today. We broke down the report a little bit more in depth. So at this point, I'm going to be watching right around $210. And who knows, we might break that in 30 minutes from now, in an hour from me filming this video in the aftermarket session. Very possible. But I'm still going to put an alert at $210, and don't get too excited with this one either, guys. Like I said with the markets, this could easily be a bull trap. This could easily sell off back to the 180s, 190s again. Be careful. But overall, if you're a Facebook owner, Meta Platforms owner, whatever you want to call it. I'm still calling it Facebook, guys. If you own the stock, you're up a lot right now, and I'm one of them that I am up on paper now after market hours, but overall, net, I'm actually still down on my position. But to see it run up 20%, I own it. I'm sure a lot of you guys do. That's pretty awesome, right? That's pretty awesome. So shout out to Facebook, Meta on a pretty, I don't want to say it's the best quarter, but it wasn't an awful quarter either. It's kind of just like, okay, the quarter was decent, not terrible, so we're rallying on that news. That's kind of what we're getting right now. So, shout out Facebook. PayPal is another one which has been a disaster. You guys know that. This stock was $300 in September, and it just hit $79. So if you told somebody in September when PayPal was at 280, 290, 300 that in less than a year, we're talking less than 8 months, PayPal's going to be down, let's see here, 72%, they would look at you like you're crazy. But that's the craziness of the markets, right? Because it happened. Nobody expected it, but it still happened, right? So PayPal, they reported numbers today. Let's see how the stock's doing after market hours. Oh, man, talk about volatility. This thing closed at 82, shot up to 90, went down to 79. Now it's at 85, so it is up about $3-ish after market hours, which is solid. They did 88 cents adjusted EPS for the quarter, which came in right in line with the 88-cent estimate, which is solid. And revenue came in at $6.5 billion versus $6.4 billion. So they beat revenue came in line on EPS, and they see full year 22 adjusted EPS, which I'll be honest, guys, this isn't the best, but their guidance for full year adjusted EPS is $3.81 to $3.93 versus the $4.63 estimate. Ouch, guys, ouch. Not the best, but hey, as long as the stock is moving up, I guess investors, traders are taking this earnings report, and they're like, all right, it wasn't that bad, and we're pushing up. Kind of like what we saw with Facebook. You know, it's not like we're getting a complete collapse in the stock. And quite frankly, a lot of the collapse, or a lot of the bad news, rather, negative news, has already been priced in, right? So PayPal's one that I'm long on as well. I am, admittedly, I think I am down on PayPal now. And funny enough, guys, this is a stock that I bought about 4, I don't want to say 4 years ago. Maybe that's pushing it. But it was before Corona. I mean, this is a stock that I owned before Corona. It ran up. You guys saw what it did. I didn't sell it, and I actually still own it. I didn't sell it when it went to the top, and I don't regret not selling because it is just a smaller long-term position for me. But overall, here we are. You know, we're down pretty much to where my average cost is, and I've been buying on the way down a little bit recently. So PayPal's one that I own. I'm long. If it doesn't work out, whatever, it happens. I'll be all right, guys, because I'm not one of these guys that puts all my money in just 3 or 4 stocks. You know, that's not how I invest. If that's how you invest, kudos to you, but that's not how I invest. So I'll be all right. If PayPal doesn't work, Facebook doesn't work, I'll be fine, guys. Honestly, I'll be fine. So let's talk about Ford. F. Ticker symbol F is one that I'm looking at here. And this is a stock that I've mentioned a lot, guys. I want to get this at a much cheaper price, but I don't want to say I'm not going to, but because we're actually pretty close. But who knows? It might not happen. I don't know. But it might. You never know. That's the thing. So for me, I'm looking at Ford at about $11 to $12 as a buy. And now we're at $14.80 to $90, almost $15. So we're pretty close, but we are still about 11 to 15, 12 to 15, shall I say, percent away from my buy point. So this thing has to fall another 15%, in other words, right? So Ford ended up reporting today EPS of 38 cents versus 37 cents, estimated revenue of $34.5 billion, and they actually smashed revenue, guys. We're talking about a 10% beat here. $34.5 billion versus $31.24 billion estimated. So nice double beat on Ford. And again, like I said, the stock closed barely under $15. It went up 1% on the day, and it's actually still it's not doing much. You know, it's actually still exactly at the price that it closed at for the most part. It's at about $14.90 right now. So Ford's not moving up in either direction, and honestly, that makes me happy. You know, I don't want Ford to explode to the upside. Sorry if you're in Ford. I'm sorry, guys, but I actually want it to come down because, again, I need it down at least 10%, preferably 15% more from where it is now for me to actually initiate a position, because I've been saying this for months. You know, I've been saying this for months that I want Ford under $12, $13. Now we're finally almost getting there, and it's almost time to strike, guys. And that's the beauty of patience with investing. And if you're a beginner, you're not going to have patience right away. It's pretty much impossible. You know, if this was me 5 years ago, 6, 7 years ago, I would have bought the day I wanted to own Ford. You know, I've been wanting to own Ford for months at this point, but now I have the discipline to actually wait for a good price to get the stock, right? But again, if it was me when I first started investing, trading, if I wanted to buy Ford and own it, no matter what price it was, I was putting money into Ford. And unfortunately, that is a trap a lot of beginners fall into. Just because you love a company, you like the company, it doesn't necessarily mean, you know, to go out and buy it at whatever level it is, whatever price it is, because sometimes you may be overpaying for a stock, and it might not be the best investment at the current levels, even though the company itself is still a very good company. So that's kind of my thought process with Ford. You know, I've been patient with it, and if you're a beginner, you're not going to be patient for the most part, unless you catch on to things pretty fast. So yeah, that's kind of a little side tangent. I don't know. I don't even know what to call that. But yeah, that's some thoughts on Ford. Nice double beat there, but I want the stock to come down. Please, please, please come down lower, and I'll be buying Ford. So Qualcomm is the next one. QCOM is the ticker on that. This ended up going up 1% on the day, closed at 135. Now after hours, it is at 142, guys. It's up a good chunk. It is up about $7 or about 4.5% in other words. So they did adjusted EPS of 321 versus 291 estimated, revenue at 11.6 or rather 11.16 billion versus 10.6 billion estimated. And guys, they crushed this earnings report, so it makes sense why the stock's moving up. So they double beat EPS and revenue. They crushed it by a wide margin, and their guidance is very, very solid, guys. They see Q3 adjusted EPS of 275 to 295 versus 259 estimated, well above the estimate, and they see Q3 revenue of 10.5 to 11.3 billion versus 9.98 billion estimated. So I mean, geez, guys, the revenue guidance is well above the estimates. So they crushed it on all metrics based on at least what I just read there. Obviously, I didn't do a full deep dive into the earnings quite yet. But Qualcomm crushing it, very solid. And on the 4-hour chart, we are not quite yet out of the woods, guys. This is kind of like Facebook, right? Facebook, the stock's ripping. Same with Qualcomm, right? But it's not out of the 180 SMA yet. It's the exact same thing with Qualcomm here. So I'm going to put my alert maybe at where should I put it, guys? I'm acting like I'm live right now asking you guys. I'm going to put it at $148, right by that moving average. If that's able to break, we crack into the 150s. That's going to be a good sign for Qualcomm. Pinterest is another one that I'm looking at here. This closed at 1870. It went down almost 3% on the day, and it ended up shooting up to $22 after reporting, which is nuts. It shot up 20%, and now it's down to about, where is it, $20? So it is down about 8% from that after hours high, but still it is up around 9% from the close, which is very, very solid, guys. So Pinterest EPS came in at negative a penny, negative 1 cent, guys, versus the 11 cents they did a year ago. So EPS is down year over year. I'm not sure what the estimate is on that. I didn't see it here on the live news tab, but overall it is down year over year. And we had revenue come in at $574.88 million versus $572.79 million estimated. So they beat, or I don't know if they beat EPS, but they beat revenue. And in terms of Q1 monthly active users, which I'd say this is bad. I mean, obviously it's bad, but maybe it was priced in because the stock's obviously ripping. Monthly active users are down 9% year over year. But again, it's probably already priced in. They knew that was coming. And the stock is down, for Pete's sake, 70% in the past couple of months. How much lower at this point could it actually go, guys? So at this point, again, it's down 70%, clearly in a downtrend under both moving averages. So I'm not going to be touching Pinterest until it breaks mid-20s. Honestly, it's got to break $25 and it's got to break into the 30s. At that point, that is where I think we could start getting a reversal. But we're nowhere near that yet, guys. We closed in the teens. We closed at 18 today, and for all we know, now we're at $20. Tomorrow, later this week, next week, we could be back into the teens, and there goes Siri again, but we could be back into the teens like that. So be very careful with Pinterest and have some patience. If this starts breaking out $25, $30, maybe it's in a couple of months from now. If you have patience, you'll be thankful for that, and you might be able to catch it on a reversal instead of trying to fight the trend and buying it now, right? So we got two more to talk about, and if you guys stuck till the end, I really appreciate you guys. Seriously, I really do. And if you haven't gotten your free money yet, I don't know why you haven't done that yet. Get your up to 6 stocks from Moomoo. Link down below. Deposit at least $100, and you get that money. Let's talk about some stocks now. Well, I guess one in particular that is not doing well. It is Teledoc, guys. Oh my goodness. Is this, I mean, this is on its way to zero at this point. I mean, obviously, I don't know if it's going to go bankrupt and go to zero, but by the looks of it, each time they report, they've just been going down and down and down. Teledoc did $565 million in revenue in Q1, and get this, guys, buckle up. They lost $6.6 $6.7 billion in the quarter. So they made 560 in revenue, right? I mean, they're losing money, clearly, obviously, but 560 million, and they lost 6.7 billion. I mean, this is just unbelievable. At this rate, they could be bankrupt in a year. I mean, I don't know what their cash levels are and what's going on under the hood. And quite frankly, I don't even want to know, because that's all I need to see. That's all I need to see. And I'm just like, yeah, I'm not touching Teledoc. And if you guys look at the EPS, I thought it was a typo at first. It might be a typo. I don't know. But they lost 41 cents a share, or $41 a share, excuse me. They lost $41 a freaking share, guys. Last quarter, they lost 7 cents a share. The previous quarter from that, 53 cents a share. They lost $41 a share. And clearly, there's something going on. Maybe it was a one-off expense, the $6 billion. I don't know what's going on. I got to look under the hood a little bit. I mean, maybe for 5-10 minutes and see why they had to pay or why they lost so much money in the quarter. But it's just a disaster, guys. This is one of those pandemic stocks that has gone down a disgusting amount. I mean, if you look at the all-time high on Teledoc, it was $300. Now it's at 35 after market hours. And I didn't even mention that. Look, it's at 35 bucks and it closed at 55. So it's down 20 bucks after hours, or in other words, it is down 40%. So it's down 40% today alone after hours, on top of being down. That's the thing, guys, you got to realize. It's down 40%. Oops, I knocked the mic. On top of being down 80%. So just because a stock's down 80%, it doesn't mean it can't go down another 40%, another 50%. It's definitely possible. And that's what we're seeing. Again, it's down 80% from $300 to $55. And now it's down 40% from $55 to $35. I have a feeling, and I'm not going to say this for sure because I could be wrong. I have no idea. I'm just saying this out loud. This stock could go to $10, $10, $15. No problem. No problem. All it needs is 2 or 3 more earnings reports like that, and it's going to collapse even more. So let's see what the guidance is looking like. I feel like I'm just tearing Teledoc apart right now. I'm sorry if you guys own it, but I'm just being honest. Let's see the guidance here. They see $2.4 to $2.5 billion revenue for full year 22. Excuse me, guys. And that's compared to the $2.58 billion estimated. So revenue guidance is soft, well under the estimate. And let's see here. Okay, and here now I'm seeing adjusted EPS was negative 47 cents. So I guess unadjusted was 41. I mean, this is just a disaster. I don't know, guys. Be careful. Be careful with Teledoc. If you're playing with the stock right now, if you're investing in it, my thoughts and wishes with you. Seriously, I don't know what else to say. So the last one for this video, guys, I appreciate it if you stuck till the end. I'm kind of ranting at this point. It's Las Vegas Sands. Let's see what they ended up doing. Looks like they did $2.53 billion in revenue. Looks like they lost 40 cents on the quarter, and this EPS has been all over the place. I mean, negative 45 cents, negative 22, now it's negative 40. So the past 3 quarters, Las Vegas Sands has not been profitable. And what I'm noticing here is, like a lot of the other stocks, this is still downtrending, right? We're under the moving averages. We have a death cross, so I really wouldn't touch this unless it started to break back, honestly, into the $40 level, guys. $40 plus, that is where I would consider it. So I'm going to put my alert now. Mark is that we're above 40 bucks, and we'll see what Las Vegas Las Vegas Sands does from that point. Maybe from 40 it goes back mid-high 40s. So what do you think? What do you think? Drop me a comment. Let me know your thoughts. Hit the like button. Subscribe. Join my Patreon. Get your free money from Webull, up to 5 stocks from Webull, and again up to 6 stocks. Literally, you guys can get 10, 11 stocks down below. Again, up to 6 stocks from Moomoo. Use that link, deposit at least $100, and each of those 6 stocks could be up to $3,500 from Moomoo. Again, use that link down below, deposit at least $100, and you get that money. And with that being said, I'll catch you all in the next video. Thanks for watching. Peace out.